Hey, Jeff Reber with Pursuit Real Estate here with a longtime friend and business partner in the insurance world, owner of two Brightway agencies, Brightway Sands in both Duval and St. Johns County. Danny Sands. Danny, fill in any gaps that I did not cover there in the intro.
Yeah, no, that's it. We got one location off Beach Boulevard in St. John's Bluff, and then the second is off County Road 210 in St. Johns County. So been in business for 15 years and have the two locations in Jacksonville.
We are not getting any younger because, been in real estate for even longer than that. It's a weird thing to say. That said, we're going to talk about insurance, specifically homeowners insurance in the state of Florida. If you own a home in the state of Florida, if you're thinking of buying a home or condo or any other type of real estate in the state of Florida, this is going to be relevant and interesting. And so we'll start right off with, Danny, what's changing in the homeowners insurance market and world in 2025 that people should be aware of or know maybe recently has changed or what's coming in the near future?
Yeah, so biggest impact this year in 2025 is we've been through a hard market for the last 5 years with the property insurance market in Florida. A big cause of that was a lot of roofing, contracting fraud going on across the state, and then a lot of other legislative issues that needed in statutes that needed to be changed to prevent a lot of the fraudulent claims and things that were going on that were bankrupting a lot of the property insurance companies in Florida. So we're coming out of that 5-year hard market that started in 2019, and we are seeing the market shift to a softer market, which is good for homeowners because you're going to see more competition in the market. Companies will loosen up their underwriting guidelines, make it a little easier to get insurance in the state. And then also they'll come in with more competitive pricing. When companies want to get more market share, they'll oftentimes undercut the market, which is good in the short term. But that typically only lasts a year or two, and then they're going to raise rates to level out with the rest of the market once they get the market share that they want.
Yeah. And I saw somewhat recently that the governor had signed a bill or legislative piece aimed at the Florida homeowners insurance market. Hit me with the highlights of that, like I'm a fifth grader, like in a way that I can understand it. What were the bullet points of that bill?
Yeah, so biggest thing is you had roofing contractors that were door knocking and canvassing neighborhoods, basically telling everybody they could replace their roof for free through their insurance companies. So that is technically illegal now.
Interesting.
Solicit that business in that way. It hasn't prevented all of them from doing it, but it has slowed that down. And then another big piece of the legislation was you used to be able to open up hurricane damage claims 5 years out after the hurricane. So you had these roofing contractors canvassing the neighborhoods, and then they would just give homeowners guidance of, hey, we'll just pick this hurricane 5 years ago, and we'll say that is what caused the damage, and then we'll get the insurance company to pay through those claims. They were also assigning benefits over to the contractors as well, which that has stopped. It used to be called assignment of benefits. So contractors could go door to door, get homeowners to sign a form that signed all of their insurance benefit over to the contractor. When they did that, the contractor then had full control of that claim, and they could replace the roof and then bill the insurance company 2 or 3 times the fair market value. Then the insurance companies had to decide, do we take this to court and potentially lose or have to pay all the litigation fees, or do we just pay above
pay 2 or 3 times what it's worth and move on.
And so that started bankrupting the insurance companies. And with Governor DeSantis passing the law in 2022 to stop that, now it took about 2 to 2.5 years, and it looks like the legislation is working, which is bringing more competition into the market.
Nice. So on that same note, I guess with legislative changes, hopefully pricing gets a bit better in the insurance world. But if I'm an individual homeowner trying to make sure I've dotted my I's and crossed my T's to save some money on homeowners insurance, what would be a few things that you see people miss that they could do to lower their insurance costs?
So starting out just from a discount perspective, any home that is built prior to 2002, 10 out of 10 times you should always have a wind mitigation inspection completed. That's going to give the largest discounts on a homeowner's insurance policy, and that pertains to the roof. So when the roof was last replaced, does it meet the Florida building code? Does it have hurricane clips? Does it have a certain tie down with roof deck attachment and the nail spacings? There's 7 different discounts within that inspection. But anybody looking to purchase a new home, one of the most important things from an insurance perspective to look at is, number one, when was the roof last replaced? And number 2, what's that wind mitigation inspection look like once it's completed? And I would get that done within that 10-day period where you really have the free look when you sign a real estate contract.
Yep.
So then you can know from an insurance cost perspective what you're getting into, and then you can make an educated decision before you move forward.
Cool. Love it. Anything else on the insurance savings that you see? Like if I maybe not buying a home, but have lived there for some years, and I call up Brightway Sands and you're like, oh, you didn't do this thing to save yourself money on your previous insurance policies. Is there anything else like that?
So smaller discount would be like an alarm discount if you're monitored for fire and burglary. But then from there, it's really looking at your coverages and your deductibles that you have on the policy. There's defaults set within the insurance companies. So for example, if you insure your home for $500,000, you're going to get 50% of that for personal property coverage automatically.
50?
Yeah, 50%. So that would be $250,000 that you're covered for on the personal property. Not everybody needs that much.
I certainly don't. Unless I've got like a Rembrandt in my living room that I don't know about. I don't need $250,000 on personal property. But okay, carry on.
So you could knock that down to 25%, or you could even go lower. You can change endorsements to where you can insure it for actual cash value rather than replacement cost. And then a big thing I would say, if it's a homeowner that has 6 months reserve set aside in an emergency fund, and they can withstand a larger claim or coming out of pocket more in the deductible area, always look at potentially raising that deductible to $2,500 or $5,000. That can make an impact as well to get that premium down.
Nope. Good. Love it. Next question that I had was, if I am buying a house and I'm looking at maybe older home versus newer home, and then you're telling me, and we talked about briefly, some of these houses need wind mitigation inspections and 4-point inspections. How do you think about that from an insurance perspective? Like what do you see that comes up often with older homes that people should be aware about or be aware of or looking at as they're going through these houses? And then vice versa, newer homes, what's more common, typical to be problematic? That's a very long-winded question, but take that wherever you will.
Well, in a nutshell, the newer the home, the less expensive the premium is going to be. Typically, brand new construction is typically going to be, half the price of older construction, but it also depends on where you want to live in the city, right? Because if you're in San Marco or Riverside or certain areas that are established and really no more land, you're going to have to buy an older home. And you're either going to have to do some renovation to it or it's already been renovated. But the two things I would, as a buyer, look at from an insurance perspective on the older homes is, number one, when was that roof last replaced? That's a huge factor when calculating an insurance premium, because
what's the hard stop on that one these days? I know there's a trip in the insurance algorithm on if the home is older than X and the roof is older than X or Y, then we're just flat out not going to write a policy. So where is that these days? It's changing constantly.
Yeah, rule of thumb, 15 years. If you're going over 15 years, you're really limiting yourself in the marketplace and you're not going to have many companies to choose from.
Do you think that'll change as more companies come back into the insurance world?
I do. Yeah. I think those guidelines loosen up in the future.
Okay.
But rule of thumb right now is really 15 years on shingle roofs. And then if they're metal or tile, they go a little longer than that. But yeah, so as far as that goes, the roof is the number one thing that I would want to know as I'm looking at older homes. And number two would be the water heater. The most prevalent claim in Florida is water damage. And number two is wind damage with roofs. So those are the two hot buttons for insurance companies. So if you have a water heater that's over 15 years old, that would be potentially something you want to negotiate in the real estate contract to have that replaced due to insurance reasons.
Yep.
And same with the roof.
No, that makes total sense. And then on the insurance claim, getting things replaced, tell me about deductibles. We've got a new deductible option in the world of homeowners insurance. So I'm used to two: general, hurricane. So how do those work? A, and then B, what's our new deductible column?
Yeah. So there's a third line item for deductibles that insurance companies have come out with. And what I see a lot of times is if someone's shopping insurance, especially for a new purchase or they're a first-time homeowner, they're just looking at the bottom line as far as what the price is that's being quoted. But not all insurance companies are created equal, and they're not all quoting the same deductibles with only having two deductibles, because some have come out with a third deductible now. So what you need to look for is, number one, the all other peril deductible. That typically is going to be $1,000 or $2,500. That is for any type of peril that could cause damage to your property. So for example, a lightning strike or water damage or fire, those are perils that can cause damage. That's just a flat per occurrence deductible. So anytime you have a claim, you'd be responsible to pay that deductible. Insurance company would pay everything above and beyond that. The next one that everybody is pretty familiar with is hurricane deductibles. The standard
is typically higher than your general deductible, right?
Typically going to be higher. Unless you have newer construction, you can oftentimes get them at $1,000 or $2,500 on the hurricane deductible. But most companies in the industry are going to give a 2% hurricane deductible, which they calculate that off of your dwelling coverage. So if you're insured for $500,000 on the dwelling, they're going to say you're responsible for 2% of that before we pay anything. And that's for a category 1 hurricane or above. If it's a tropical storm, a windstorm, or anything lower, that falls under your all other peril deductible category. Okay. And the third one that's pretty new to the industry, some companies are coming out with wind/hail deductibles for a third line item. So you got to be very careful when you're looking at that, because that used to fall under the all other peril deductible. But now oftentimes, to be more competitive, insurance companies will bump that up to 2% or 3% of your dwelling coverage. So you think you're getting this great price, but if you have a claim, you're going to be out of pocket a lot more money.
Right. They're treating the wind and hail deductible the same way they are a hurricane deductible. So they've lowered their risk as the insurance company, which has lowered your coverage as the homeowner, to your point. No, that makes sense.
Yeah.
All good stuff. And I don't want to overwhelm myself or those listening. So anything else really on any of those questions, if you're current homeowner or soon to be homeowner, that you would want to mention in today's insurance world? Yeah,
and I would advise anybody looking, especially first-time homeowners or those that aren't familiar with owning a property and then having to insure it, just know that your costs are going to be more the older the property that you're looking to purchase. And that's where I would just really do my due diligence on the front end to make sure that things have been updated and you're not going to have a bunch of additional costs after you close on the property. And then on the flip side, on the newer construction, what we see typically on those, less claims usually, but then you may have some warranty issues or things that you have to go through as you're buying newer construction. And, theoretically, you won't have to put as much money into it, but a lot of times on the newer construction, the warranties pass. And then, a lot of homeowners think homeowners insurance pays for everything that has to be repaired within a home, which just isn't the case. There's routine maintenance and wear and tear that a homeowner has to account for and insurance companies don't pay for.
Right. No, that's right. Well, this was great. Appreciate all of the insight. If somebody wants to reach out and, I don't know, requote their existing policies, or maybe they're buying a home, want to get something rolling with Brightway Sands, what's the best way to get in touch with y'all?
Yeah, so best way to contact us is our telephone number is 904-999-3250, option 4, or you can email me at danny.sands, SANDS, @brightway.com.
Love it. And if you've got real estate questions, you can give me a shout, 904-405-1995, email jeff@pursuitrealestate.com. Thanks for watching, and we'll catch up soon.